Actor and columnist Will Rogers once said, "There have been great inventions since the beginning of time: fire, the wheel, and central banking." In this lesson, we're going to explain how checking accounts work, and we're going to complete a check register. All to answer the question, how do people gain access to money they keep in the bank? To make sure we're ready for this lesson, let's take a look at warm-up number 2, where we examine this set of ordered pairs, x, y's. First, let's write a function y is equal to f of x for the set of ordered pairs. To do this, we can explore the patterns. First, we notice that all of the x's seem to go up by 1, but the y's seem to go up very differently. We take a look at the relationship between the x's and y's. In the first one, it appears like it's just simply 2 times x, but 2 times x doesn't work here. It becomes 2 times x plus 1. But here, 2 times x plus 1 doesn't work. However, x squared plus 1 does seem to work. Does it work here? So 4 squared plus 1 does work, meaning what we find is that y is x squared plus 1. Now we're going to use that function to determine the y value when x equals 11. This means that y is 11 squared plus 1. Now 11 squared is 121, plus 1 is 122. Now let's take a look at a problem that you will be able to do by the end of this lesson. Gary and Ann have a joint checking account. The balance at the beginning of October was $9,145.87. During the month, they made deposits totaling $2,783.71 and wrote checks for $4,871.90, paid a maintenance fee of $12, and earned $11.15 in interest on the account. What was the balance at the end of the month? Well, they started the month with $9,145.85. The deposits of $2,783.71, so that's going to be added into that number. Now, they wrote checks for $4,871.90. That will be subtracted from the total. They also paid a maintenance fee of $12, which is hidden, but it's a negative. And interest earned of $11.15 is added into their accounts. So by totaling all of this up, we're going to get $7,056.83. Consumers have savings, checkings, and loan accounts in a variety of different banks. A survey reported that most consumers consider their primary bank to be the one where they have the main checking account, even when they use bank services at other banks. A checking account is an account at the bank that allows a customer to deposit money, make withdrawals, and make transfers of funds on deposit. A check is a written order used to tell a bank to pay money or transfer funds from an account to the check holder. Payments can be made by writing a paper or electronic check or by making electronic funds transfers. An electronic funds transfer, or EFT, is the process of moving funds electronically from an account in one bank to an account in another bank. An EFT is often referred to as an electronic check or e-check. An electronic check or e-check is just an electronic version of a common paper check. Many people use e-checks because they are fast and secure. Because the transfer is electronic, the processing time is very short. Both the paper and the electronic forms of check are written to the payee, the receiver of the transferred funds. The account owner of the check is the drawer. Both the payee and the drawer can be a person, persons, or a company. The checking account needs to have enough money to cover the amount of the check in order for the check to clear, that is, the bank to pay. This process is known as check clearing. You can make deposits using a deposit slip. You can make deposits with a bank teller or at an automatic teller machine, an ATM, or through some electronic devices. Most banks offer consumers access to an automated teller machine or an ATM that provides 24-hour access to the banking service such as deposits and withdrawals. You need a bank card and a personal identification number, or PIN, to use the ATM. Usually there is no charge if you use one of your bank's ATMs. If you use another ATM, there may be a fee by the bank that owns the ATM and your bank as well. Often, direct deposit is used to deposit payroll or government checks directly into an account. The validity and financial worthiness of deposits must be verified before the bank will allow the customer to draw on the funds. If you would like to receive cash back when you deposit a check, there must be sufficient funds already in the account. A hold is put on the account in the amount of the cash received. When the deposit is cleared, the hold is lifted and all of the money in the account is available. When cashing a check, a payee must endorse the check either by writing, by a stamp, or electronically. Once the money has cleared the depositor's account and is paid to the payee, the check is said to be canceled. If a check is written for an amount that cannot be paid out of the account, the check is returned or dishonored. This means there are insufficient funds in the account and the payee will not receive the money. Banks charge a fee for processing return checks. Some banks offer consumer overdraft protection plans that pay a check even though there's not enough funds in the account. There is a fee for this service and the money must be repaid. There are many types of checking accounts and the names of which vary from bank to bank. Each has a different name and different benefits and requirements. Some banks offer free checking while other accounts have a monthly maintenance fee. Some banks pay interest on their checking accounts, which is a percentage of the money that is in the account over a given period of time. Some popular checking accounts are going to be explained now. Basic checking accounts are the most widely used type of checking accounts. Customers earn money in and out of the account by making deposits and writing checks to pay bills or access money. Many of these accounts do not pay interest. Interest-bearing checking accounts pay customers interest, usually on a monthly basis, on the money that is in the account. A minimum balance is often required, and a fee is charged if the account balance drops below that minimum. Free checking accounts require no minimum balance and charge no maintenance fee. The Federal Truth in Savings Act guarantees such accounts are available. An express checking account are accounts for people who want to avoid getting a traditional bank. Express accounts are often accessed electronically via telephone, computer, or ATM. Some banks charge a fee when an express account owner uses the services of bank personnel. Now accounts stand for negotiable order of withdrawal. These are free checking accounts that have interest payments attached to them. Lifetime checking accounts are available in many states for low-income customers. Fees and minimum balances are low or non-existent. Lifeline accounts are required by law in many states. Online checking accounts are available from traditional brick-and-mortar banks as well as from online banks. They offer the user 24-hour access to funds and availability to make payments quickly and securely. Bank accounts can be owned by an individual or a group of individuals or a business. In a single account, only one person can make withdrawals. These are also called individual or sole owner accounts. An account that has more than one person listed as the owner is a joint account. Any person listed on a joint account can make withdrawals. Here we're going to learn how to deposit money into a checking account and to track the transactions in the account on a monthly basis. Allison currently has a balance of $2,300 in her checking account. She deposits $425.33, a $20 rebate check, and a personal check for $550 into her checking account. She wants to receive $200 in cash. How much will she have in her account after the transaction? The first thing we're going to do on this deposit slip is list all of the deposits, total up all of those deposits, and subtract the number that we want to receive back. This means there will be $795.33 going into the account. The account already had $2,300 in it. We add the $795.33 that will be going in with this transaction, and we get $3,095.33 in the account. Let's check our understanding of this. Lizzie has a total of X dollars in her checking account. She makes a deposit of B dollars in cash and 2 checks, each worth C dollars. She would like D dollars in cash from this transaction. She has enough to cover the cash received in her account. Express the new checking account balance after the transaction as an algebraic expression. So if she currently has X dollars and she is adding B dollars in, as well as 2 checks worth C dollars, then we subtract the money that she is going to be withdrawing, D dollars. You should keep a record of all transactions in your checking account, including checks written, deposits made, fees paid, ATM withdrawals, and so on. Definition. This record is a check register. The record can be handwritten or electronic. It tracks all the debits or withdrawals and credits or deposits of a checking account. Now, let's complete a check register. Nick has a checking account with Park Slope Savings Bank. He writes both paper and electronic checks and makes EFTs. For each transaction, Nick enters the necessary information: check or confirmation number, date, type of transaction, and the amount. He uses E to indicate an electronic transaction, determine the balance in his account after the Star Cable Company check has been written. So the first check was written for $1,721. Subtracting that from the $3672.27, we get $1951.27. Then wrote a check for $32.50. Subtracting that from the $1951, we get $1918.77. Then made a deposit of $821.53. Adding that to the $1918, we're going to get $27.40.30. But he wrote a check to Verizon Wireless for $101.50, leaving in his account $2,638.80. Then wrote a check for $138.90 to Star Cable Company, leaving $2,499.90 in the account. Now, let's check your understanding of this. Nick writes a check to his friend James Sloan on May 11th for $150.32. What should he write in his check register, and what should the new balance be? Well, the next check he should write is number 3273. This was on May 11th to James Sloan. The check was for $150.32. We put that minus 150.32 and subtract it from the $24.99 to get $2,349.58. Let's check your understanding and ask this question: would the final balance change if Nick had paid the cable bill before the wireless bill? And no, the balance wouldn't have changed at the end of the month, though the balance may have changed along the way getting there.